Well, the election may feel like old news. The campaign ads are off the air, the polling booths are packed away, and the headlines have moved on to the next big story. But make no mistake, what happened at the ballot box a couple of weeks ago is going to shape our property markets for years to come. And in today's episode of the Michael Yardney Podcast, we're going to unpack exactly what the recent election results means for you as a property investor, as a homeowner, or as an aspiring property buyer. You see, after Wealth Retreat a couple of weeks ago, Brett Warren, National Director of Property at Metropole, took Simon Kuestenmacher, the demographer, and me aside, and we had a conversation about what the election outcomes tell us about the direction of housing policy, population growth, infrastructure, and the property investment landscape in general. And so in today's show, you're going to hear us discuss why government schemes like the Help to Buy and the 5% deposit initiatives are going to drive short-term demand, but are going to worsen affordability in the long run. We're going to discuss how immigration, demographic shifts and planning delays are fueling a deepening housing shortage. We're going to touch on the critical shortage of trades that's holding back supply. We're going to mention why we really shouldn't be bashing property investors. That's not the solution to the problem, especially when they're doing the heavy lifting to provide rental accommodation that the government just can't. And perhaps most importantly, we're going to discuss why I believe the second half of this year could present a real opportunity for savvy investors who act before the crowd returns. Now, this isn't just a political recap, it's a strategic lens on where our housing markets are heading, what opportunities may arise, and how you can position yourself to benefit. So let's cut through the noise and get to what really matters, what this election result means for your property journey. Let's get into it.
Welcome to the Michael Yardney Podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Hi, it's Brett from Metropole. Look, I'm joined by a couple of really key members to discuss the outcome that may affect you. So I'd like to introduce you to Michael Yardney, who's our founder of Metropole, with over 50 years of property experience to help us dissect what's going to happen to the property market. Welcome, Michael.
Thank you, Brett.
I've also got Simon Kuestenmacher here, who is with the demographics group and has, I guess, an understanding of what's going to happen with the demographics and the shifts and the changes. So thanks for joining me, gentlemen.
Pleasure.
Thanks, Simon. I guess the first thing to understand is, and there were some key policies there with a 5% deposit, raising the price points for different thresholds, and also that Help to Buy kind of scheme. Michael, is that pouring fuel on the fire, increasing demand in a time where interest rates are coming down and the market's shifting?
Well, housing affordability has been an issue. In the midst of a housing crisis, not enough accommodation, not enough dwellings for our strongly growing population. And the Labor Party's policies are going to fuel demand, particularly from first homeowners. So you mentioned two of the policies, Brett. One is the Help to Buy scheme, which has already been in train for a while, where you actually go in partnership with the government. The government makes it easier to get into first home buying. But the other big policy that may well have swung some voters across to them is the ability to buy a house with a 5% deposit. And they've raised, in other words, the government's going to back you, guarantee you don't need lender's mortgage insurance. And they've raised the limit in each state. It varies from state to state. So let's use Melbourne as an example, Brett. You can use this new scheme starting in January 2026, 7 months away, to buy $1 million home. So if you have $50,000 deposit and maybe $50,000 stamp duty, and maybe the bank of mum and dad can help you get there, all of a sudden you only need 5% deposit and the stamp duty, and you can buy $1 million home. We know from the past, we've seen these cycles before. When you give first home buyers the ability to get into the market, they'll spend all that, and that's going to fuel the sub-$1 million market in Melbourne, the $1.5 million market in Sydney, and similarly around Australia. So what it's going to do is in some ways be an established homeowners grant, because they're going to suddenly get a lot more for their home, because these buyers are going to fight for the limited properties that are available. Yes, it's going to help some people into the market, but my concern is it's kicking the can down the road, because the next round of home buyers are going to have to pay more because this new batch are going to push up prices, Brett.
Yeah, look, it's certainly sucking a lot of that demand coming forward, isn't it? And from your point of view, Simon, how's this going to play out from a demographical perspective?
First and foremost, the banks are happy if you hand out bigger mortgages sooner. That is nice for a bank. But demographically speaking, it doesn't make all that much of a difference, I'd say. We see this big fat cohort of first home buyers, or potential first home buyers. These are largely millennials that are now establishing their families. And they do, of course, want their first home. And they want this relatively large house of 3 to 4 bedrooms. They need it now. They're very limited dwellings available, and so prices will be high, and we'll see pretty much the same narrative. So I wouldn't say that any of those policies that were brought will make a massive shift in the game. We will still see people complain about exactly the same stuff and much more of the same.
Yeah,
I think it'll not only help those people wanting to buy homes, the millennials, but even maybe bring forward the home buying to apartments, because you can buy a home for $1 million in Melbourne, $1.5 million in Sydney, but boy, you've got to go a long way out to get
to travel.
you do.
You do have to travel.
I guess, Simon, your expertise is obviously immigration and people who are coming in to this country, and there's no doubt that we're just simply not building enough homes and enough properties. I think we all agree on that, and that's not going to change in the next 2 or 3 years. But I guess the different demographics, I mean, from an investor perspective, what kind of demographical people and target market should they be considering?
Yeah, so if you consider the migrant market, you want to remember what migrants do on the housing market. They always, when they come to Australia, know one address and one address only. That's either their university or it's their place of work, which both happen to be in the center of town. So these are people that then want to live as close as possible to the one address that they know. And this is the apartment market.
Yep.
So when people are worried about, we're still building so many relatively small apartments, is this what we need? I'd say, well, as long as we have migration, there will be people who want and need to live in those dwellings, so they'll be just fine, assuming that these apartments aren't falling over.
Of course, unlike the past. But you've also mentioned a couple of times that you don't see immigration going anywhere soon, right? It's not exactly going to fall off a cliff. It's going to be quite strong.
Exactly. So my very, very strong opinion when we talk about property is that a lot of those demand things rise and fall with migration, and you can completely ignore any politician who talks about cutting migration, because we are a migration nation, and we are also a country that is dependent on income tax for well over 50% of our tax revenue.
Yeah.
The federal government earns more than 50% of its money through income tax. So as long as a politician does not tell you about this insane tax reform that they have, where they give you much more of your income tax and they tax your wealth instead by introducing a land tax, for example, massive death taxes or anything like this. If you don't push this forward, you can rest assured that you're going to get your tax through income tax, and you cannot take income tax paying people out of the system if you even want to run a remotely feasible budget.
Yeah.
So we will see the highest migration numbers on average that we have seen, which is about 250,000 net new migrants each year.
Yep.
That's baked into the system as long as we don't rapidly or massively reshape the system. The high migration is baked into the pie, whether you like it or not.
Well, the Labor government made it clear that the immigration policy is not going to change, and we're just not building enough dwellings for all these.
Well, that's what I was going to get to, Michael. We've kind of wrapped up the demand side of things. That's not going to change dramatically, and probably unlike the last 10 years, if we rewind 10 years, if we fast forward to where we are now, let's talk about the supply side, because there just simply not enough apartments around, which is converse to a decade ago. So that cycle's well and truly flipped on its head, hasn't it?
Well, there's two elements to the supply situation. First of all, we're not building enough dwellings, and the government said we're going to build 1.2 million dwellings in the next 5 years. They're not going to build any. They want to encourage developers to do that. But in fact, it's more a state-based regulation and even local council regulation that encourages development. But anything new that's going to be built, Brett, is going to be much, much more expensive. It's a combination of material costs, labour costs, supply shortages, but in particular a shortage of skilled labourers. Now, Simon, why aren't we bringing in more skilled labourers? We need the builders.
Because we kind of are linked into migration figures to a certain degree. We can't take in much more than what we already do. And we do have lots and lots of treaties. For example, we take in UK backpackers, pretty much as many as they want to come.
Really?
So if we take them in, you can't just say, okay, well, where do we cut things?
Yeah.
And so you'd be absolutely astonished how small the share of skilled migrants is, of permanently skilled migrants. And so when
Maybe
we
that's
talk
the problem.
so when we talk about migration, and we always talk about just simplistic and total numbers. And that's not actually the main deal here. So I'm absolutely in favor of keeping the numbers approximately where they are, but we still need migration reform. And this means we have an honest look at the largest group of international students, about 50% in recent years. And say, okay, so if we minimize these international students to make space for other migrants to come into the country to keep the numbers at the same level, well, we need to first take a hit because international students are insane cash cows.
Yeah.
$30,000 in fees each year, an additional $30,000 in economic activity that each international student creates. So that means, well, cool, we can cut, let's say, 100,000 of them out. We take in more skilled migrants. That's actually harder than what it seems. And I would, though, like this path where we hand out more sponsored visas. We hand out more visas that have a regional geofence around it, where we say we allow you to work in your profession in this particular region. It could be regional New South Wales, regional Victoria, something like this to utilize migrants better. And I would call this the beginning of a national demographic strategy, because at the moment all those policies run parallel. They're not interlinked, they're not interconnected. A housing policy, a migration policy, for example, are obvious examples of policies that must be connected to one another.
That's why we've got him on, Michael, because he knows what's going on there as well. And there's a lot of those hidden costs. I mean, we've talked about the superficial things, but there's also a lot of estate taxes that have come in. There's a lot of broken systems in the background, and it's probably not getting enough airtime, is it?
Well, when you look at the cost of new dwellings, when I first started, and I did a number of property estate developments in my early days, the councils and the state government supplied roads, they supplied infrastructure, they supplied water and sewage, but now it's actually the developer who has to do that. It's been pushed onto the developer, and the developer's not going to do it for nothing, so they then pass it on in the end cost of new dwellings. So even though the cheapest form of dwelling to build is plonking a square house on a cheap block of land in the outer suburbs, a large part of the cost of that is actually the state taxes and local taxes, which inflate the cost of new dwellings substantially. And then anything that involves a crane and unions, which is what they're trying to build with the high-rise dwellings, where they can build them in bulk, that costs a lot more as well.
So, yeah, look, that's some excellent points. Now, what happens next? What needs to happen next, I guess?
Well, we need more skilled labourers. We've said that now. To be fair, the Labor government has said they're going to encourage more apprentices. The trouble is it's going to take time. Now, Simon, you've often said on our Demographics Decoded podcast that you believe one of the things that's necessary is to get more skilled tradespeople in Australia, and you've even suggested free TAFE.
Oh, I'm absolutely convinced that universally free TAFE is what we need, because ultimately we put a pay barrier in front of getting a TAFE degree, which is of course what we need to get any kind of trades qualification. And this hurdle is too high for some people, so they don't jump over it. They stick with lower paid jobs. That's not ideal for us, but most people look at this hurdle in front of a TAFE degree and go, might as well go to university. And we're now sending half of our year 12s to university. And that is, quite frankly, too much. We don't need that many people in the university system. So we should therefore incentivize at least some people that would go down the uni pathway to go and get a TAFE degree. Universal free TAFE is
idea, but there's a time lag, isn't there? So it's going to take a number of years for them to get through and get their apprentice.
Theoretically, the nice thing with a skilled migrant is you get them working straight away by creating a TAFE student and then an apprentice. It takes a couple of years to get this worker. But we're talking a big ingrained systemic shortage, not just a temporary shortage of workers. So we need to fix the system. We need to make sure that year after year, for the next couple of decades, we create slightly more TAFE people each year, and that bit by bit will soften the skills shortage. The risk here, of course, is that the current tradies who are massively benefiting at the moment from the skills shortage because they can charge whatever the hell they want. They don't like this. So you would need to sell it as this big fat a beneficiary idea for Australia, because the tradies themselves, and therefore potentially master builder who has to, has the interests of their people in mind as well. It's iffy because a shortage is always beneficial for some people.
Now, Brett, you asked what else is necessary. We've got to get the new developments out of the ground quicker, through the planning process quicker. And we know in the middle ring suburbs where there's the missing middle, where we need more medium density dwellings, there's NIMBYs and local councils. Simon, you've often spoken about the concept that local councils should lose their planning authority.
Well, this is the idea that if you look at London, the Greater London Authority, there are systems where a city can decide where to build what. If London wants to build 20,000 kilometers of bike paths, whether this is a good idea or not, they have the power to do so. If you want to do this in Melbourne or in Sydney, it's impossible.
You've got to go through each municipality.
Exactly. That has problems. And so what we have been seeing in New South Wales and Victoria in particular is that the state grabs more and more power away from local government. The idea is you can push through bigger housing targets and force the local government areas to build the stuff. It sounds like just a clear, wonderful idea from the top, more centralized decision making. But the risk there is that we lose local intelligence in the process. So the three-tiered system in an ideal setup leads to smarter local decisions. And we risk just taking the local intelligence out of the system, and then we build nonsensical, centralized, think communist governments kind of projects. That's the worst case scenario. But this is by now baked into the system. We're now at the moment only doing this with the carrot, where we created a big pool of new money, and we say, beloved local government area, if you actually meet your housing targets, you get some additional money. But we will very soon see the stick, where money is being withheld from local governments if they don't meet the housing targets. And most importantly, I'm pretty sure we'll soon see the occasional council here or there being put under administration if they don't play ball.
Yep. Look, guys, I guess the third thing, we've had some great ideas here, but also the third thing, and I'll keep this fairly brief, let's stop bashing investors, right? Yes. They're the only ones who are providing housing and accommodation for some of these people. So, I think putting people land taxes and stamp duties and really impacting that investment is going to slow things down and really provide a further shortage of housing.
Well, the government hasn't got the money to provide the housing, not enough social housing. It's not bringing enough social housing into the market, so it's not going to provide it for those who need even more expensive accommodation. There's nothing in the books ahead for that. So it's going to need mum and dad investors who are going to take a financial risk, but they deserve a reward for that, Brett.
Well, some will disagree, obviously, Michael, they always do. But at the end of the day, there is a window of opportunity. What we've talked about today, it's not going to happen. There's no magic bullet. We've talked about longer term reform, demographical reform and shifts and things like that as well. So from an investor perspective, there's certainly a window of opportunity right now. We're probably due to have a few more rate cuts this year and things like that as well. So I certainly see the second half of the year for property investors really being quite positive. The other thing, of course, towards the end of this year is the first home buyer grants kicking in January. So we have that window there to actually get into the market, get into a really good position. And rather than waiting in line, why not get your ducks and your eggs in a row now so you can actually take advantage of that and get into the market now?
Well, we know buyer sentiment moves before seller sentiment. So once buyers start getting in the market at a time of limited supply, prices are going to go up. There'll be less stock available. Then sellers are going to see, prices are going up, I'm going to sell. But until that happens, the prices start rising. There'll be less stock on the market. And it's not investors who are going to be selling, Brett, because prices are going up, rents are going up, interest rates are going down. They'll be able to hold on. So it'll be people moving up or downsizers moving out as these first home buyers move in, because there's not enough new stock for all these people. So they're going to be buying established properties. So I agree with you. Get in before the crowd when there's not as much competition. And that's going to go through very quickly. This year will pass very quickly.
It always does. We're in May already. Don't miss the boat. Michael, thank you very much for your time. Great to speak with you. And also Simon, great to catch up again.
Absolute pleasure.
Thank you.
Well, the discussion we just heard with Simon Kuestenmacher, Brett and me, I hope is giving you some understanding of what's ahead for our housing market. And since we had that discussion just after the election, there's been the interest rate announcements and we had our rate cut that everyone was expecting in May, but that's the RBA's signal that the tide has turned, and those paying attention know exactly what that means. We're now at the early stages of what I believe could be a property super cycle, a period of prolonged property price growth. Think about it. Interest rates are falling. As we've already discussed, Labor's policies are supercharging demand. Population growth is booming and will continue. The Labor Party has decided we're going to have a big Australia. Supply remains at critically low levels and construction just can't keep up. In every previous cycle, moments like this have created generational opportunities, but only for those who've acted early. If you've been waiting for the right time to invest, I don't know your personal circumstances, but this could well be it, because when the next few rate cuts roll through, and they will, confidence is going to flood back into the market, competition will heat up, and you'll be paying tomorrow's prices, the prices in the future rather than what you'd be paying today. So you can sit back and watch what happens, or you can position yourself to benefit now. And that's where we come in. At Metropole, we've been helping investors safely build and protect their wealth through every cycle for the past few decades. Right now, we'd love to offer you a complimentary wealth discovery chat with one of our wealth strategists, and that'll help clarify your financial goals, help you understand how these macro shifts could affect your positioning. We'll explain to you how we can create a personalized investment strategy, a plan for you, and how you could take advantage of this turning point before the market surges. So go to metropole.com.au and book your free wealth discovery session. Let's build a plan that puts you ahead of the curve, not behind it, because in 6 to 12 months' time, you're either going to look back and feel confident you moved early, or you're going to be frustrated that you missed a window of opportunity. Go to metropole.com.au and organise for your free wealth discovery chat with a wealth strategist.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset message, I'd like to talk a little bit about balance in life. Let me tell you something that might actually ease the pressure you're feeling right now. You don't have to have it all every day. The myth that we've been sold about daily balance in our life, that we should be ticking every box every day, it's just unrealistic. In fact, it's harmful. We beat ourselves up for not getting to the gym because we worked late. We feel guilty for not being present with our kids because we had a client call. We wonder if we're failing at life because we can't fit it all in today. But here's the truth I've learned after decades of juggling business, investing, family and personal growth. True balance isn't about days, it's about seasons. There will be seasons when you work your tail off. That's what's going to be the most important part, when working takes the front seat. And there'll be seasons when your family needs you more. And there'll be seasons when your health must become a priority. And there'll be seasons of building, transition, of healing, of adventure. Trying to force them all into one neat, equal daily proportion is a recipe for burnout, not balance. So my suggestion to you is give yourself permission to be unbalanced in the short term so you can fulfill that balance in the long term. Just make sure you're doing it with intention, not by accident. You see, every area of your life runs on what, let me call it a dimmer switch. You've likely heard the old idea that you can only focus on one or two things at a time and then everything else must go dark. But I don't buy that. You see, you need focus. Yes, you need to have priorities, but that doesn't mean you've got to shut down other parts of your life completely. Think of each area, health, relationships, finance, purpose, like a dimmer switch, not an on-off switch. Dial some down, but don't let them fade to black. Because here's the hard truth. If you neglect your health in your 40s, it won't be there in your 60s. If you ignore your relationships while you build your empire, whether it's your property empire, your business, your career, you might end up on top, but alone. If you forget your mind, your joy, your stillness, you won't even enjoy what you've built. So yes, go hard on your focus areas, but keep the lights on in the other areas. Even if it's just a flicker, remember, anything above zero still compounds. So my message for you today in this mindset message is you don't need a perfect balance every day. You need a seasonal rhythm and you need dimmer switch thinking. So be kind to yourself if life feels out of balance right now. You're not failing. You might just be, I guess, in a different season. Just make sure you don't turn out the lights on things that really matter and don't wait for someday to start living. You already have everything you need. You're just one mindset shift away from seeing it. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kuestenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. Oh, and I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcast, there are 3 little buttons at the top of the player. Or just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favorite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?